I'm up over $20,000 day trading. And today I'll be talking about exactly how I did that through my bias and through the trade I took. Let's get into it. So, a pretty awesome day here. I ended up taking a total of 2 trades, one NQ short and then also one ES short. NQ was the winner. And so coming into the open, my bias was pretty simple. Looking at overnight price, I was actually looking at shorts off overnight price. We ended up seeing price come up here and take out this high in 25,145. And through my higher time frame looking at the hourly time frame, I recognized that we had an hourly PD array here, which we came back down and voided. This was the same hourly PD array in which we targeted yesterday. If you go back to yesterday's review, we kind of talk about that. But we end up seeing price through London come down here and just completely disrespect this 1 hour array, also this 1 hour array. So that was kind of my look into price, simplifying my process. And also the opening range move, looking at that in combination with overnight price. For me, I felt as if price could easily come back down here and look for lower. Now, New York Open was relatively bullish. What made you still bearish? Well, again, like I said, it's through that higher time frame look and through overnight price. And if you look at the take that we had today, it was kind of very similar to what yesterday's take was. This is why I always say price is king. You see a trade like yesterday, which was pretty much flat break even, and you see a trade like today, very similar, that ends up hitting take profit. Well, if we briefly look into this, the reason I was still bearish after price had initially tapped almost perfectly at its hourly gap fill was because I wanted to see how price react off the hourly gap fill, which wasn't the most bullish. What do I mean by this? Well, if you take 2 levels here, this is exactly what we talked about yesterday. You take 2 levels here and you see price, come down here, make a move, and then, you see price after initially taking a high like we did here, seek that move lower, and then once taking that low out, right, just like we did through here, or seeing that push into that hourly gap, once we see price retrace, right, the difference in what defines a reversal as opposed to continuation, or just more so a retracement in the market, is how price reacts off it. So for me specifically, it's very clear for me in price when price wants to make, or when price wants to seek reversal, once price displaces as aggressively, if not more aggressive than it displaced back down. So what I mean by that is if we see price take out a low and then come back up here slowly, kind of like how we did here, it's not the most bullish indication. But despite that, what I'm looking for is off the move in the low, I want to identify, okay, is it either a retracement for higher, right, in reversal, or is it a retracement for lower, right? And you see clearly off this 5-minute candle at 10:10 a.m., clearly shows you that. In terms of my entry confirmation, the confirmation off this trade here exactly was at 10:02 a.m. Eastern Standard Time. We ended up taking the trader at 10:11. A bit choppy, yes. Stops were placed to swing high. TP1 was based off the hourly gap fill. For me, my risk on my Lucid accounts were $1,200. My consistency is around $1,200 because I'm on payout cycle number 2, and I was able to meet the requirements. I think I could show you guys here. This was Tradify, and you see the P&L. Today is about 1.9. And then if I pop over to Lucid, you could see the P&L on these accounts too as well. 1 second. So, if you're curious on the Tradify trade, I realized that the cap or consistency through trade number 2. Trade number 2 was a break-even trade, but I was in the money and almost at a 1R at the peak of the move, so I was able to realize at a closure at consistency. This is Lucid right here. Boom. There you go. So there's your showcase, or there's me showcasing the accounts. But yeah, we ended up taking confirmation. The short was off a 5-minute gap, which initially turned from a bearish gap to a bullish inversion fair value gap. We then were looking for that bullish inversion fair value gap to get disrespected. We had seen that. Good push lower, TP1 trade, beautiful move, and just using the concept behind this off a low, we were able to gauge that, okay, price was more so looking for a retracement as opposed to looking for reversal here. So a good move overall. That's the day. Simple and neat. With that being said, hopefully you guys enjoyed the recap, and I'll catch you guys in the next one.